Hello everyone, welcome back to another video of Trading with Cheng. Before we start, I hope everyone can first press the like button, share it with your friends, and of course, subscribe to my channel so that you will get notified on the upcoming videos. In today's video, I will be teaching you on what is Fibonacci and how to use Fibonacci. Without further ado, let's start. Before we actually dive in on how to use the Fibonacci, we will first have to understand the theory and the basics first. So as you can see over here, this is basically the Fibonacci retracement tool. So how can you draw it? So let me first delete this. If you are using TradingView, what you can do is if you see these few levels over here on your left hand side, you can proceed to draw this and you draw from a low point to a high point. So what you can see over here, this is your Fibonacci retracement tool. So what is this tool about and why is there so many people using this? Fibonacci retracement levels, it connects any 2 points that the trader views as relevant, typically a high point and a low point. The percentage levels provided are areas where price could stall or reverse. The most commonly used ratios include 23.6%, 38.2%, 50%, 61.8%, and lastly, the 78.6%. So as you can see in this trading view, we have the 0%, 0.236 now. 0.236 simply means 23.6%. So 0.382 simply means 38.2% and so on. 50%, 61.8%, 78.6% and 1%. So this is technically 100% over here. We will ignore the rest which is down here. I will teach everyone how to remove it. So how do we actually remove the levels that we don't want? Firstly, you can double click the Fibonacci retracement tool. This is where you can adjust your Fibonacci levels. So we will proceed to remove the 1.618, 3.618, 2.618, 4.236, and once you press OK, this is what you will see with the complete Fibonacci from a 0% to 100%. Now, what is so useful about Fibonacci retracement tool and how do we actually use it? And what do the levels mean? So imagine I'm going to use the arrows for an example. Price do not move in arrows, remember that. They move in candlesticks, but it depends on how you want to use it. We also have different settings for price. We can use Heikin-Ashi, we can use candlesticks, we can use line chart. Now in this example, let's say price moves up from this low to this high and it comes back down. This is when the Fibonacci comes in handy. Remember I said that you can draw from one low point to the high point. As you can see, when the price comes back down, it came down to the 50% level. So that is when we say that price have retraced 50%. You may ask me now, what is so important about if price have retraced 50% or 78.6%? Now, firstly, if we have an uptrend, price is going to move higher and higher. Yes, because it's an uptrend. But now, price will not keep moving up without coming down. Remember this, who are the ones that push the price up? It is the banks. When the banks push the price up, they will also need to take profit. And when they take profit, that is when they sell off their buy position. So that is when price will start to come back down because the banks have proceeded to sell their buy positions. So in an uptrend, there will always be pullbacks. If we look at the live chart over here, as we can see, when price moves up aggressively, we will definitely have pullbacks. It will not just keep going up and up without coming back down. So that is when Fibonacci comes in handy and it can tell us how much the price have retraced. For example, in this situation, this up move, as you can see, it retraced to 23.6%, and after the retracement or the pullback, it reversed from this level and push the price up. So what traders usually use or how do they use it is that they love to take reversal trades at Fibonacci levels. So now let me share a secret with everyone over here on how I use Fibonacci. I do not use every single levels over here. So I'm going to show everyone my customized settings for Fibonacci. I'm going to double click this and I'm going to remove the 38.2. I'm going to remove the 23.6 and I'm going to remove the 78.6. So these are the levels that I use for Fibonacci when I use Fibonacci for trading. So now why do I remove those levels? Firstly, very important, when we go to a supermarket or when you are shopping, we want to find for discounts, yes? It is the same logic in the market. We want to buy low and we want to sell high. That is how we make profit. So that is why I use these settings. I want to see price come down at least the 50%. It's just like when you're going to the supermarket or looking for sales, we want to see a 50% discount, which is much more effective. So why do I keep the 61.8%? Because if it moves down some more, I will be even happier to look for buys. So that is why I keep these settings and I don't use any higher levels than the 50% because I want to search for more discounts. I want to buy lower and I also want to sell higher. So over here we have an up move, we have a down move. So I'm going to demonstrate how do I draw the Fibonacci levels. Firstly, if it's an up move, we'll draw from the bottom to the top. As you can see, this time the price have retraced almost 50%. So that means that there is a very good chance that price could reverse and let us take some buys at these levels and continue to a higher price. So what about the downtrend, or if price is going down? We are going to draw the Fibonacci from the top to the bottom. So in this scenario, we can see that the price have not pulled back enough or retraced to at least the 50%. So I will not prepare to look for sales. Over here we have two up moves. Up move A, let me label it up move A, and also up move B. Let me label it B. So now, how do we draw Fibonacci retracement for this move? Do we draw it from the bottom to the top like this, or do we take the bottom from this pullback? So if you don't know, let me tell you the answer. So the answer is either A or B, correct? The answer is A. Why is the answer A and the answer is not B? Or you may think that isn't both correct. Let me show you. Now, I told you that we can draw from a bottom to the top. Yes, okay? But the problem is we are only going to use the Fibonacci when there is no proper retracement of at least 50%. So in this case, if we draw from this bottom to this top, you can clearly see that this pullback over here, it did not pull back of at least 50%. So we have to continue extend the Fibonacci all the way to the top until we get a 50% retracement. If you don't understand, don't worry. I will jump into the live charts right now to show you the example. We are in the live charts right now. So let's start from this move over here. If I take this move to this top, as you can see this week over here, it pulled back at least a 50% or a 61.8% already. Can you see this? This week over here, it pulled back at least 50%. So we'll remove the Fibonacci and proceed to draw from the next move. So we draw from this low to this high. Can you see that the price actually retraced at least a 50%? So this whole up move from this bottom to top, it has retraced, so we will not consider this up move. Let's move on to the next. If I take this low to, for example, this top, as you can see, it retraced a 50%. So we will not draw from this bottom to this top. This whole up move has completed a good retracement. Now let's move on to the next. If we draw from this low to this top, we can see that this candlestick actually retraced a 50 or a 61.8%. So this is a complete retracement. We will not take from this. Now if we take from this low to, let me just reduce the chart. As you can see over here, this low to this top, there was no proper 50% retracement. So that is when we have to keep extending As you can see, if we keep extending, there's no 50 retracement at all also. So we have to continue to extend the chart all the way to the top. So we want to wait to see price manage to retrace back to the 50%, then we can confidently say that this whole move actually did a 50% retracement. I hope everyone understand right now, but we will also look at some sales example. We have two exact down moves over here. So how do we draw the Fibonacci? Do we draw it from here to here, or do we draw it from here to here? Now let me tell you the answer. The answer is you will draw from this. Why? Because if we take this example, if we take from this high to this low, do you notice that this high to this low, it has completed a 50% retracement? So this move over here, it has a good retracement, so we do not have to use Fibonacci anymore. So now let's proceed from here. So we will proceed to draw from this top to this low because there was no proper retracement. So we want to wait for price to retrace back to the 50%, then we can look for sell entries to continue to the downside. If you don't understand, don't worry, we are also going to jump to the live charts to look at examples for drawing Fibonacci at a down market. As you can see, this is the USD JPY live chart and it is having a downtrend. So let me show you how can we draw Fibonacci. Let's say we are at this point over here and we'll draw from this high to this low. Can you see that this high to this low, we already have a proper retracement. It retraced more than 61.8%. So this move from this high to this low, it retraced in a good amount, so we do not have to draw Fibonacci anymore. Now let's move on to the next. We can proceed to delete this. Now if we draw from this high to, for example, this low, we can clearly see that there was no 50% retracement, so that is when we have to go down lower. Now to this point there was no 50 retracement yet, so we have to go down lower. So till this point there was no 50% retracement over here. Let's go down to a lower point. There was still no 50% retracement, so we can proceed to go down even more. So there was no 50% retracement. So what can we wait for is if price decides to push up back to the 50%, then there is an opportunity for us to look for some sells. Does it mean that the Fibonacci retracement is an ultimate tool to generate money? Can we just solely depend on a Fibonacci retracement tool? No, you cannot. That is why you have to stay tuned for my next video, where I will make a video on Fibonacci trading strategy, where we can add on confluences, we can add on more confirmations when we use the Fibonacci. Because what I teach today, you cannot just trade using it. What I can suggest you to do is to draw those Fibonacci retracement levels on your chart and see how price reacts from those levels and not just trade from it. So that is my advice. You can go back and practice with it. That is it for my video today. If you have any questions, feel free to ask in the comment section below. Lastly, please like, share and subscribe, as it will be a motivation for me to make more videos in the future. Besides that, if you are interested to watch me live trade, you may head over to trading.live, where I have live streams daily. See you in the next video.